Palantir and HIMS stock. What you're looking at in front of you right there, that's a 3-year chart of Palantir and HIMS stock. And in the past 3 years, Palantir is up a shocking 1,384%. HIMS stock is up a ridiculous 1,113%. Unreal performance. If you have owned Palantir and HIMS over the past 3 years, you have made a whole lot of money. And if we compare that versus, let's say you just had your money in the indexes, like the nasdaq's up 51% in the past 3 years, S&P 500's up 40%, Dow Jones Industrial Average up 28%, the Russell 2000's up 11%, right? You know, this is why we are individual stock pickers, because we're going after those life-changing gains, right? And when you can bet on a company that has a bright future and has a very low valuation at a particular time, you can absolutely change your entire financial future. Like if you own, let's say, just S&P 500 over the past 3 years, like you're doing better than you were, no doubt about that, right? But if you own stocks like Palantir and HIMS, you're at it literally changes your life. Like whatever financial position you were in before that, you're at a massively different. Not like, oh, I'm a little better off than I was. No. Like you were in the indexes, you had trouble even keeping up with inflation, right? You were in these type of stocks, you changed your life forever, right? Now, in this video here today, we're going to go through 3 things in regards to Palantir and HIMS. Huge changes in regards to both of these companies. I mean, absolutely massive changes that everyone has to understand what's going on here with Palantir and what's going on here with HIMS fundamentally and how much is changing, okay? Second thing is, and these businesses are changing rapidly right now. Second thing is, where do these stocks go from here? Okay, it's great. We know these stocks have been 10x pluses over the past 3 years, but what about from here, right? And third thing we're going to get into is, will I be buying any shares of either of these stocks, Palantir or HIMS? So we got all that to get through. It's a beast of a video. I appreciate y'all joining me as always. Thanks so much for being here. One thing only I need from you guys. Please right now, hit the like button on this video. That's all I need from you. I hope every single person watching this can do that for me. Hit the like button on this video. It's all I need from you. Additionally, if you want to be subscribed to the channel, you can certainly subscribe. We're at a new all-time high subscribers in the history of this channel. Also, congratulations! Signed up some new awards last night in the private stock group. We had 1 person hit 7-figure club, and then 4 individuals hit the 6-figure club this past week. So congratulations to you out there. If you don't know, my wife actually is the one that sends these awards out. I have to sign them up, and then she's the one that deals with all that. So all you guys that join the 6-figure, 7-figure club, you can always thank my wife for sending those awards to you. If you've never seen them, this is what the 7-figure award looks like, and this is what our 6-figure diamond award looks like there. Additionally, when you join the private group, you get these steel membership cards for 1000X and the private stock group membership card. And if you ever wondered what those trophies were underneath my silver play buttons there, that's what those are. 6-figure, 7-figure club. By the way, you ever played poker with me? You ever played chess? Oh, okay. All right, guys. I appreciate you joining me as always. Pin comment down there today if you're looking to apply to join my private stock group. You can certainly do that. That will be the pinned comment down there. You get access to all my premium courses and access to my private Discord chat, exclusive weekly content, all those sorts of things, okay? Alrighty, let's get into this. HIMS. Oh my gosh. Look at the EPS beat. Q1 GAAP EPS of 20 cents. That beat by 8 cents. That is a monumental beat for earnings per share of HIMS. Incredibly impressive. Additionally, revenue was up a shocking 110% on a year-over-year basis. That beat by $47 million. Very nice number there. Subscribers grew to 2.4 million subscribers, up 38% on a year-over-year basis, right? Now, we do have something that's a little troubling here, okay? For the second quarter of 2025, the company expects revenue of 530 mil to 550 mil, so we can call it a midpoint of 540 mil. Consensus analyst estimates were at 564. So we're talking about a $24 million difference between the midpoint of what the company's expecting and where analysts are at. That's not good. If you're a higher valuation stock, you trade at higher trailing 12-month Ps and forward Ps and those sorts of things. You got to come in and beat, especially in this type of market where people are scared, right? Not ideal. Certainly not ideal for HIMS, right? Additionally, for the full year 2025, companies talking about revenue of 2.3 billion to 2.4 billion, so we call it a midpoint of 2.35 billion, right? And that's versus 2.32 was the consensus estimate. So we're talking about not much better than kind of where analysts are at here, right? And so for HIMS investors, a lot of HIMS investors, they're expecting this company to come in and knock out of the ballpark, right? They're expecting them to blow numbers out of the water when it comes to what analysts are expecting here. And so to come through with a guide that's lower and then a full year guide that's only very, very slightly above, what analysts are expecting on a midpoint, a little disappointing. So HIMS is like really good, and then it kind of get into it a little more, and it's like, dang, it's not quite as exciting as we thought, right? No, they said we're starting 2025 with incredible momentum. Millions of people are turning to us for access to care that is personal, affordable, and has the potential to drive better outcomes, said the co-founder and CEO. We're building a platform that puts the individual at the center of every decision, and others are taking notice. Over time, we expect wider collaboration across the industry, inclusive of pharmaceutical players, innovative leaders in diagnostic and preventive testing, and world-class providers. We believe this will strengthen our ecosystem and position us to curate a best-in-class offering that can reach tens of millions of people. You got to understand, HIMS, let me finish reading this and I'll get into that a little deeper, okay? This is a future of our platform, allowing a historically disjointed industry to reach more consumers for the benefit of those consumers, right? You're going to understand with HIMS, okay? Basically, they're laying out a future there that this is still very early days. Okay, 2.4 million customers. We're trying to grow to tens of millions of customers. You're going to understand HIMS, what it seems like to me. HIMS wants to become a new age Walgreens, CVS, right? If you think about what Walgreens and CVS represented for the previous generations, HIMS really wants to do that, but on a much higher level and a much deeper level, right? You think about Walgreens and CVS, brick and mortar stores, right? You think about HIMS, digital. They're not going to worry about building thousands and thousands of brick and mortar stores. You think about Walgreens, CVS, more just, you're getting your prescriptions there. HIMS wants to be even a deeper player in healthcare than just you're getting your prescriptions, right? And so what I see with HIMS is a very bright long-term future that there's no debating like that's the way things are moving, right? There's no debate at this point in time. And so HIMS is kind of in a sweet spot, and I think they'll continue to attract more and more customers, not just this year, but for honestly years and probably decades to go into the future, right? Now, if you look at their balance sheet's very impressive. $273 million in cash and cash equivalents. Short-term investments of $48 million. That's a nice number, well over $300 million. What are we looking at? $325 million or so in cash and short-term investments. Additionally, if you look at total assets, just under $900 million versus $342 million in total liabilities. Impressive balance sheet at HIMS, right? Now, additionally, you look at the income statement, very good. I gave them an A- here. Very good numbers. Revenue went to $586 mil from $278. Impressive. Now, one trouble spot was cost of revenue. I thought that was worth mentioning. The cost of revenue did we can call it actually over 3x'd on a year-over-year basis. That is worth noticing, right? Because the revenue did not 3x on a year-over-year basis. Gross profit went to $430 million from $229. Gross margin percent did decrease to 73% from 82%. So that is something worth, noticing there. That's why, in some of these kind of numbers like this, like gross margin percent going on, that's why I didn't give them an A+. If it was just like everything was great, they would have gotten an A+ in this quarter. Marketing expense came out at $231 million. That was up over $100 million on a year-over-year basis there. And if you look at marketing expense as a percent of gross profit, we're talking it's over 50%. So it's a pretty hefty number. And it makes sense. Like every time I have on the dang TV, it doesn't matter if I'm watching a basketball game. It doesn't matter if I'm watching any other type of sporting event. If I got CNBC on, oh my gosh, the amount of HIMS commercials that play is ridiculous. And so I understand that they're spending a fortune on marketing because you watch TV for 10 minutes and you get 20 HIMS ads. It's insane, right? Operations and support, I thought this was impressive. They went to 63 mil from 38. Not a very big increase on a dollar amount basis when you consider how much revenue was up, right? Like up 100% plus there, that's impressive. Technology and development almost doubled on a year-over-year basis. G&A, general and administrative expense, they kept that in line. It was only up $14 million on a year-over-year basis. when revenue was up, $290 million, something like that. Like, that's not bad. Not bad at all. So total operating expenses went to 372 mil from 219. Income from operations went to 57 million from 9.9 million dollars. Net income went to 49 million from 11 million, and then diluted EPS went to 20 cents from 5 cents there. So really impressive income statement. Not an A plus. There's some spots here you can point at, like gross margin percent going down 900 basis points on a year-over-year basis, but overall still very, very impressive. That wasn't even the biggest news. None of that was the biggest news, in my opinion, in regards to HIMS. This was the biggest news. HIMS and Hers appoints Amazon veteran as Chief Operations Officer, the COO. COOs, some would make an argument that it's the most important position actually at a company. CEO, CEO is kind of just overlooking everything, right? They're trying to keep everything in balance and just make sure the ship's sailing in the right direction. But when you really break down a business, you can make a strong argument that the most important person, the one that's in the most day-to-day grind, is really the chief operating officer of a company, okay? So HIMS announced the appointment of Kabani as a chief operating officer. Kabani joins with nearly 20 years of global experience at Amazon. Kabani led Amazon's acquisition of PillPack, launched Amazon Pharmacy, and built key operations for Amazon Logistics, Kindle, Prime Video, and more, right? Phenomenal. I mean, I'll be honest with you guys. I think that was the biggest thing to come out in regards to HIMS today. By a mile. The numbers are cool, but at the end of the day, the numbers are, slightly better than expected, or the guide was slightly worse. It's not like that's making some monumental difference. This, folks, is, in my opinion, a huge differentiating factor for the company overall. I think this is really good news for them. And I've seen these Amazon folks, when they go to other companies, look what Carla's done with Honest. HNST, the small cap stock I own. I mean, Honest was a $1 stock. She comes in as CEO of that company, and now it's like a $4 stock that, $4 or $5 stock that I wouldn't be surprised is a $10 plus stock by the end of this year, right? And she's completely fundamentally changed the business, and she used to be a vice president, pretty important title at Amazon overall. So those Amazon folks, when they come in, they know what they're doing. Amazon didn't have all this success by just magic. They know what they're doing, and so I think this is honestly the reason that HIMS stock is not down more if you look at kind of the after hours action, because I think there's going to be a lot of optimism around this, okay? Now, additionally, I looked at HIMS. Now, on face value, you look at the forward P and you're like, oh my gosh, it's a 63. That's 3x or so where the average stock in the market trades at. It's rich. Listen, when you consider the growth rates of HIMS and how much growth this company should have over the next 5, 10, 15 years, right? I actually don't consider this that expensive of a company, considering the stage that HIMS is at right now. So I look at a forward P in the 60s. I look at a 2-year forward P, let's call it in the 30s, maybe the 40s, depending upon where profitability. I don't think that's expensive, folks. And so, to be honest, like if you forced me to buy, if you forced me to either short HIMS stock or buy HIMS stock tomorrow, if I was forced to do one or the other, I would much rather go on the long side of HIMS, given where valuation is at and where this company's growth rates are going over the next many years, right? And we'll get more into HIMS in just a moment here after we get through some of these Palantir numbers in regards to where I see HIMS stock price going and those sorts of things from here, and if I'm looking to start a position in HIMS, okay? Now, Palantir, listen, this is beat factory here. Revenue came in up 39% on a year-over-year basis. It beat by $21 million, almost $22 million. Additionally, for this quarter, they're in now at this point in time. They guided for a $936 million midpoint. $899 was what analysts were expecting, so good. Beats, right? For full year, they're guiding to about $3.9 billion in revenue from 3.75 was consensus estimate. Beat. If we look at commercial growth, they're talking about, they're guiding for excess of $1.17 billion of U.S. commercial with a growth rate of at least 68%. They also raised their adjusted income from operations guidance to $1.71 billion to $1.72 billion, and they're raising their adjusted cash flow guidance to between, we can call it a midpoint of $1.7 billion. Beat factory at Palantir. But if I had to push back, it's not smash factory. There's a difference between beat factory for a company and smash factory. Beat factory for a company is like what Palantir just did. They came in, beat numbers. They didn't smash it. It wasn't like, if they come in and reported, revenue growth that was up 45% on a year-over-year basis, right? Or guidance that was just crushed what analysts were expecting. You would be looking at Palantir stock up after hours. You'd be looking at that stock at 135, 140 after hours. It didn't come in with those numbers. They came in with good, solid beats, which there's nothing wrong with that. But in this market, and given Palantir's valuation, you really want to have that stock explode to the upside, you got to come in and just smash it, crush what people were expecting. And that didn't happen. It was just good beats across the board, right? Now, if you look at the income statement, bravo. A plus, baby. A plus. Look at Palantir. Think about this for a moment. We go back 3 years ago. Remember I showed you how much Palantir stock's gone up over the past 3 years, 1,300% or whatever insane amount, 1,400%. Listen, if we go back 3 years ago, this company had F-grade income statements. F-grade. And in a matter of 3 years, they switched from garbage income statements, F-grade joke income statements, to A plus income statements. Now you might say, how are you able to bet on this company and place chips on the table when it was an F-grade company? If you looked at the numbers Palantir was reporting after quarter as 2022 went along, the profitability was getting better. It was very clear to me that the company was going to flip to profitability, and then we could talk about upside from there. And it was also very clear to me the product was going to become very huge in the future in regards to their products they had in the marketplace. And so that's how I was able to bet when it was an F grade. And you know how else I was able to bet on Palantir and obviously made great sums of money? I didn't bet big. I bet, for me, relatively small amount of money, right? I didn't even put six figures in Palantir, right? And so for me, with a smaller investment size, that's how I was able to bet on it as well. It wasn't like I risked the farm or something like that, right? And when you're betting on an F-grade company at that particular time, you got to bet smaller. Because at the end of the day, if it becomes what you're going to become, even if you put a smaller amount of money into it, you could have made so much money, it's ridiculous, right? And I've been fortunate enough to make hundreds and hundreds and hundreds of thousands of dollars in Palantir over the past 3 years. Between what I've taken in profits and what I still have in profits, oh my gosh, crazy numbers, right? Between all my different portfolios. So A plus income statement here for Palantir. Gross profit went to $710 million from $518 million. Sales and marketing, they kept that in check. R&D, they kept that in check. This is a masterpiece, folks. G&A, they kept that in check. Look at how much revenue was up. We're talking about revenue up about $250 million roughly on a year-over-year basis. And yet you look at the sales and marketing, R&D, G&A, like they're up, but it's like small numbers, small potatoes compared to how much revenue's up, right? Income from operations exploded to $176 million from $80 million. Interest income's up to over $50 million a quarter now they have coming in interest income. Oh my gosh. Woo-wee! Income before income taxes, $223 million versus $110 million. So, we can call that over a double up on a year-over-year basis. Net income, $217 million versus $106 million, over a double up on a year-over-year basis. And then if we look at diluted EPS, 8 cents versus 4 cents in the same quarter last year. Pure masterpiece from Palantir in regards to that income statement. But, you could make an argument that the balance sheet's even better. Look at the balance sheet. What a banger. We're talking cash and cash equivalents of around $1 billion. We're talking marketable securities now of $4.4 billion. This is ridiculous. I mean, look at total equity. Shareholder equity on the company is up to $5.5 billion now at this point in time. I had music on in the background. This song came on, and I thought, this is literally playing as I'm looking at the balance sheet. I'm like, I had to take a picture of this. It was called Money to Blow. You ever heard it? Money to blow? And I'm looking at the balance sheet and I'm like, oh my gosh, this company's got money to blow. Uh-oh. Incredible. Look at commercial. Oh my gosh. U.S. commercial revenue growth, 71% year over year. 19% up on a quarter over quarter basis. U.S. commercial customer count grew 65% year over year and up 13% on just a quarter over quarter basis. Woo-wee! Look at U.S. commercial remaining deal value up 127% year over year. Look at U.S. commercial remaining deal value on a quarter over quarter basis up 30%. the company's still accelerating the growth rates, right? U.S. commercial total contract value, 810 mil, 183% year-over-year growth in contract value for U.S. commercial. Incredible. Look at the net income of this company. The rule of 40, throw it out. Throw it out. We're calling it the rule of 80 now for Palantir. Back-to-back quarters with an 80% plus rule of 40, right? Which basically rule of 40 is you look at the EBITDA margin percent and then you look at the revenue growth percent. You add those together and you get a number. So let's say your EBITDA margin is 20% and your revenue growth is 20%. Boom, you're at a 40%, rule of 40. And so that would be seen as good. And then the further above 40% you go, basically the healthier the business is. And, when it comes to these SaaS type companies, and also like the more special you are as a company, like the bigger the valuation you're going to command, the bigger the P ratios you're going to command, things like that. An 83% rule of 40 is ridiculous. Like you almost never see that. Like the amount of companies that have ever done an 80% plus number back-to-back quarters, it's probably only a few companies in history. It's ridiculous. Like incredible. U.S. revenue growth was up 55% year over year. Now, if you want something to pick at, I'll show you something. U.S. commercial revenue growth grew 71% year over year. Phenomenal. But commercial revenue growth, if you total the whole business, which adds up international as well, it was only up 33% year over year, which shows you what? International commercial is so slow to adopt Palantir's products, right? So slow. Now, is that Palantir's problem? Is that Palantir's fault? The answer, in my opinion, is no. This is not like Palantir is like having some trouble. Not really. Just you got to understand, in the international markets, they're so slow to adopt new technology. And so although Palantir has this amazing product and all the U.S. companies are adopting it, and they see what's going on with AIP, right? They see what's going on with Foundry and Gotham and Apollo and all their different products, right? They see everything that's going on there, and U.S. loves it, U.S. companies, but international companies are slow. And if you ever wonder why the U.S. is going to remain the main stock market for still years and decades to come in the future, because you look, what I'm showing you right in front of you right now is the largest companies in the world as far as market capitalization go, right? And you're just going to see it's overwhelmingly dominated by U.S. companies. I could show you the top 100. It would be the same exact thing. And why is that? It's because U.S. companies adopt new technologies quickly. They see something that's going to help their business out dramatically, whether it's on a software front, sales front, marketing front. Boom, they use it right away. They're like, let's go do this. The European companies and these other folks in these international markets, they're like, well, let's see it for a few years and then maybe we'll adopt it. And they wonder why they keep getting bypassed. And so when I hear some of these folks, like I react to some of these videos on the reaction channel about like, the end of the U.S. stock market and, other markets are going to take over. I say, how? How are their companies going to take over when they can't even adopt the best technology? They have no chance. They have no chance. And the gap is widening between U.S. companies and the rest of the world. It's not getting smaller. It's widening, folks. And that's the scary part, man. That's the scary part. And so at the end of the day, the U.S. companies are running the world. And if anything, they're going to run the world even more than ever, right? Look at total revenue growth of the company, up 39%. But here's where it gets even more exciting. Total revenue growth, excluding strategic commercial contracts, actually was up 44% on a year-over-year basis. So I think that gives you a better understanding of what's actually going on with Palantir revenue growth. 44% up year-over-year there. Very strong, right? Now, if we want something to pick at here, I always can find something to pick apart, okay? Here's the deal. If you look at the guidance here, that's a midpoint of $936 million, right? If you look at the second quarter of last year, Palantir did $678 million, okay? So run the math on that. That would mean the company will have revenue growth in this quarter that they'll report in 3 months from now, right, of 38% if the midpoint comes in. Now, did you see where the number just was? The company just did 39% revenue growth. So if they did only 38%, that would mean the company is now in revenue deceleration phase, where the percentage growth is now starting to shrink, which is, still exciting, but it's not as exciting as when that revenue growth percentage grows bigger and bigger and bigger and bigger. Now, here's the deal. Palantir and Alex Karp, they understand the game of Wall Street now, right? They had to learn a very expensive lesson that first year and a half. They were a public company, and after that, I think he figured out the game. Guide for a lower number than what you're going to report. So my opinion is they're probably going to beat this guidance number they put out. That's my guess. Look at Palantir over the last several quarters and you'll kind of see that, right? So my opinion is they're probably realistically going to do 40 to 41% revenue growth, which will be very exciting because that will mean revenue growth is still accelerating for the company if they do what I think they're going to do, okay? But the issue is, let's say they do what I think they're going to do and come in with like a 40% or 41% number. They did 39% this past quarter, which means we're then at the end stage of revenue growth acceleration. That does not mean the company is going to stop growing, but the percent of increase is going to start actually going down likely in the next quarter or two. So that's what it sounds like to me. We're like peaking around revenue growth acceleration here. And so unless something dramatically changes positive for the company, it sounds like we're kind of peaking that revenue growth acceleration. And so if you're wondering kind of what's going on with the stock price, that I believe is kind of what's going on here. Because people are like, wait a minute, the revenue growth acceleration's over, right? If you're looking at the midpoint. And then even if you're expecting them to come in with better than expected, it's still kind of like, oh, we're kind of at the end stage. We're maybe at the 9th inning of revenue growth acceleration, which does not mean the end of Palantir, right? Because that means maybe they're still going to grow, at a 30% plus clip for years to go in the future. But it's not as exciting when you're like pushing to like a 40% revenue growth. Because ideally, you'd want to see the company push to 40% revenue growth, then 45% revenue growth, then 50% revenue growth. And like, obviously, at some point in time, it's unrealistic. And you're going to start moving the other way in terms of those growth rates. And you're going to go from 40% to like 38% to 35% to 33%, right? 30%. And then maybe longer term, you can kind of even it out and have like a consistent growth rate of, whatever it shakes out to be. Maybe it's 20% a year or 25% a year or something like that, right? But there's an adjustment to be made there. And so you see the stock price moving down after hours. My opinion that has a lot to do with it, right? And so, inside our Palantir chat, we have, our Palantir chat's one of the busiest inside the private stock group's Discord chat, right? One of the private stock group members, he said, what do you think about Palantir moving down after such impressive results? Because there's no debating, like the results were extremely impressive from Palantir, right? And I said, valuation, beat factory, not smash factory, right? Palantir has very high valuation on it. You look at the trailing 12-month P, the forward P, the 2-year forward P, it's extremely expensive, right? And, when you come through with a beat factory, not a smash factory, that's what happens. I said, when you have a forward P as high as Palantir does, it's like climbing a mountain, free climbing a mountain. You ever seen those? They make my hands sweat if I ever watch those videos, right? Where somebody's like free climbing a mountain. I said, one little mistake when you're free climbing gets scary fast, right? It's like, whoo, baby, you better save yourself quick or, you're done. I said, one big mistake and it's death. And that's what happens when you're dealing with a super high valuation name. You look at Palantir and, one little mistake, which is kind of like, revenue growth here potentially decelerating next quarter. And boom, stock gets hit 8% after hours, 9% or whatever, right? If they were to come in and let's say next quarter they actually have deceleration and then they guide out for the next quarter a bigger deceleration, the stock will crash. It'll fall from these recent highs it reached around 125, you'll see the stock fall 50% down to the $70 level, right? $75, something like that, maybe even $60 a share. So that's what will happen if that does happen. Now, if the company accelerates, let's say 40, 41% growth in this quarter they're about to report, and they guide out for, let's say, 43 or 44% growth the next quarter, then we're fine. And then we could be talking about a stock that heads toward 150. But, there's a lot to kind of get through that, right? And then Charlie inside the private group, he said, agreed, much like NVIDIA. And I said, well, the good thing with NVIDIA now, a year ago, very different story, but now with NVIDIA, NVIDIA's forward P is relatively low, right? NVIDIA's now got a forward P in the 20s. So versus obviously a Palantir's got a forward P in 100 plus, right? And so I think NVIDIA is actually setting up pretty well for the next couple months here. So I wouldn't be surprised at all if in 6 weeks from now NVIDIA is like 130 to 150. I wouldn't be surprised at all. But you got to understand where NVIDIA is coming off of. Horrible sentiment, right? So negative in terms of semiconductor space. And then they're probably going to come in and smash it. They're probably going to have a phenomenal guidance. Heck, a lot of these big tech companies are going to spend just as much as they said they were going to spend or more bullish NVIDIA. So don't be surprised if NVIDIA actually sets up pretty well here, right? Now, where are these stocks going from here? Will they be buying any shares of Palantir or HIMS now at this point in time, okay? Well, here's the deal. They're no man's land, okay? Both of these stocks are now in no man's land. And when I say no man's land, that doesn't mean they're, destined to crash or something like that. It just means it's going to be hard after tomorrow. It's going to be hard to move those stocks significantly down further or significantly up further because the bulls don't have enough ammo to get super, super excited about things and say, I got to go buy some tomorrow because it's going to skyrocket. And the bears don't have enough to really short these stocks yet or really bet against them because you don't have enough evidence either way in regards to this. You're kind of taking a gamble. If you're, trying to play these stocks from a 6-month perspective, which is what a lot of Wall Street does, you aren't at a stage yet that it's clear these stocks are going down for the next 6 months or up for the next 6 months, right? And so I would look at both of these as no man land stocks where it's just they're going to kind of flounder around. They'll move up some days, they'll move down some days, but it's going to be hard to make a definitive move on either stock. They're going to kind of shake around with the market. If the market's having a great green day, they'll probably go up. If the market's having a bloody red day, they're going to go down. And it's going to be hard for them to make any significant move until next quarter and we get a better clarity, right? Because the overhang on Palantir now is, has revenue growth acceleration done? Or are we about to go into decel? And then with HIMS, it's around that guidance. And people are like, why was that guide kind of weak? And I don't know about this. And so that's what's going on with those stocks. And so they'll shake around. But at the end of the day, after they make their moves tomorrow, it's going to be really difficult to have those stocks make any significant move up or down after that. It will kind of just be in no man's land until you get more clarity on either of those events, right? Now, as far as me personally, am I interested in buying Palantir or HIMS? Okay, more shares. Well, I don't own any shares of HIMS, but I do obviously own Palantir, right? In regards to Palantir, no. I feel very comfortable with what I hold in regards to Palantir. I have these shares in the public account. I have more shares in the Patreon portfolio as well, right? So I don't feel like I need to go buy Palantir tomorrow or not. I'm happy I was able to buy Palantir at an average cost basis of $7.39 a few years ago, right? Magical. With Palantir now, you're playing with a lot of fire because of the valuation of the stock, right? And if that revenue growth does start to decelerate, the stock's going to get hammered. There's no debating it. It's going to get hammered hard. And the problem is with Palantir, the overhang for Palantir for a while, honestly, is going to be, even if next quarter, let's say they come in with the 41% revenue growth next quarter, so slightly accelerating from this past quarter, 39%. Okay, then people are going to look at the next quarter and be like, maybe the acceleration's done. So that's the issue we have going on with Palantir. And then remember, we're going to have to comp these numbers next year. And because these numbers are so strong, it's not like this is going to be easy comps next year. And people are going to be thinking about that. They're going to be thinking, because remember, you got to understand, a lot of people that own Palantir stock or buy this stock are not holding it for the next 5-10 years. They're holding it for the next 5-10 weeks or next 5-10 months, right? That's just the truth. A lot of these hedge funds, they're not looking at Palantir and saying, oh, I want to own this for the next 10 years. They're saying, I might want to own this for the next 10 months. And if they look out there and they say, okay, revenue might start to decelerate, they look out there and they say, you know what? The most exciting times for Palantir is probably done in the short term. The stock is going to get hammered if that's the situation, right? And they might say there's limited upside there with significant downside risk. HIMS might be interesting. HIMS might be interesting. I need to listen to a conference call. But looking at the numbers of HIMS, I'm pretty impressed. Looking at the business model of HIMS, I'm pretty impressed. But I need to listen to that conference call. And if I walk away from that conference call really impressed, could I start a position in HIMS in the next month? I wouldn't be surprised. I love betting on companies that have great, next 10 years in front of themselves, right? And I look at HIMS and I'm like, dang, it looks pretty promising. So I need to listen to that conference call and see. And then maybe I could start a position in HIMS, because some of these, I'm already kind of moving on to my next batch of stocks to buy, right? You know, if you look at the last generation of stocks I was buying, when the last generation meaning the stocks I was really loading up on, the past few months, a lot of those stocks I have my positions built now. The Nike, the AMDs, a lot of those stocks, the Celsius, I have my positions built in those. I feel comfortable with where I'm at, right? So now I'm kind of looking at the next generation, and I'm buying this next generation of stocks, which is like Adobe and Google and some of these others. And I'm looking at somebody like a HIMS here, and I'm like, might be. So, but I got to listen to the conference call, and we'll see where that goes. And then maybe I end up, adding a HIMS to the portfolio, because it does look fairly promising, right? Because at the end of the day, if they execute on what they could potentially execute on, I mean, we could be talking to a company about a healthcare giant long term, right? Not like a little niche player in the healthcare market. No, if HIMS really executes well over this next 10 years, you could be talking about this becomes a healthcare giant in the United States of America, and maybe even international as well, right? Where they become one of the biggest players in pharmaceutical delivery, healthcare, right? Healthcare on your phone, and be able to have a new age doctor experience. I mean, I don't know, man. HIMS could be very, very interesting. Alrighty, guys. Appreciate you joining me. As always, thanks so much for being here. If you're looking to apply to join private stock group, private wealth group, pin comment down there. Click on that. Fill out a form, see if you can get access to that. Maybe a little later on this week, that's access to my Becoming Master of Stock Market full course, Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, Financial Statements Mastery, my Valuations Mastery course, very important, as well as my private Discord chat, access to 1000xstocks.com, all that good stuff. Much love and have a great day.